I've shown this chart before on this channel, and it demonstrates how most people don't know what they're talking about. And they say that past performance has no impact on future performance. It does have impact, just in the reverse way that most people think. Most people just look at past performance. When something went up, it might continue to go up. If something goes down, maybe you better stay away. But actually, for Bitcoin and also for the S&P 500, the connection is exactly the reverse. But this is just a quick summary of what I've already shown in prior videos. On the y-axis, we see the forward-looking performance. On the x-axis, the past performance. When in the past we had very poor performance, we tend to see outsized performance in the future, and vice versa. When we already had a run in the last 2 years, we tend to see worse performance in the future. Currently, we are over here, so quite high expected forward return. Now this is Bitcoin. We've got the same connection for the S&P 500, with the only difference that now the time window is different, right? For Bitcoin, it's roughly 2 years. 2 years of performance in the past to 2 years of performance in the future, our 4-year cycle. For the S&P 500, the cycle is much, much longer. It is 17 years and 16 weeks. So if we had poor performance in the last 17 years, we should have quite good performance in the future. If we had great performance in the last 70 years, we should have less performance going forward. But again, for Bitcoin, the best time window is close to 2 years. That's where the correlation between past performance and future performance is the highest. Hi, my name is Gerhard. I've been in crypto for the last 8 years. I started this channel 5 years ago, and 3 years ago I hit my first million. And I did this through active trading. On average, I outperformed buying and holding Bitcoin by 2% per month. That's then how that looks like over time, and that's then the portfolio adding regular contributions. We opened a copy trading pool last year that outperformed Bitcoin, and this year we are outperforming again with a target of achieving the same 40% per annum as last year. Now, based on this correlation chart of past performance to future performance, we can make a prediction of Bitcoin. How will Bitcoin's price be roughly 2 years from now? This dot over here, this implies a Bitcoin price of $216,000 by the middle of March of 2028, or an annualized performance of 72%. But that approach is relatively dumb, as in we just look at the correlation of past to future performance. But there's also ways to time the market. For example, a very popular way to time the market is the 200-week moving average. So that's this chart over here. Historically, Bitcoin wasn't below that moving average for any extended period of time. And so maybe we should just use this to our advantage. We can't necessarily time the market perfectly, but let's say we just dollar cost average into our portfolio. Let's try to not be too aggressive, but let's try to buy in more when we are close to the 200-week moving average, and to buy less when we're very far away from the 200-week moving average. How much would we potentially gain if we follow that strategy? So this here again is Bitcoin with the 200-week moving average, and what we see at the bottom, that's how far we are away from that moving average. We should buy aggressively when we are close or even below the 200-week moving average, and we should buy less when we have some distance to that moving average. For this analysis, we start at the beginning of 2018, because that's when Bitcoin did not outperform technology stocks that much anymore. That's where I see Bitcoin having matured. That's also when the number of active addresses on the Bitcoin blockchain didn't grow anymore. This is pretty much when we got our raw product market fit. So 2018 is the start of our simulation. We are using Bitcoin Strategy Analytics here. So that's a backtesting platform available to the premium members of this channel. And we're looking at the dollar cost average optimization mode. So we are dollar cost averaging into Bitcoin. We are buying per week $100. And this is the price development of Bitcoin during that time. And we are buying more when we are rather low, and we are buying in less when we are rather high on the Bitcoin price. So we adjust our dollar cost averaging based on the distance to that 200-week moving average. What's then the delta? So here it is. At the bottom, we see how many Bitcoin we accumulated with just constant buying, so $100 every week. And at the top, we see the dynamic purchases. So yes, we do have more Bitcoin after all of those years. But how big is the difference? Here are the numbers. We would have invested $44,000 over the time period. And without any market timing at all, we'd be now at $218,000 of a portfolio. With the market timing, we have more, and that's no surprise. We are buying more aggressively when we are closer to the moving average. By the way, we are currently quite close to the moving average. But what's the difference? It's 25%, again, over the course of 8 years. Instead of making 21% per annum, we make 24% per annum. So only a delta of a bit over 3%. Yes, 3% compounds to 25% over that time period. But we can see from this example that the most important factor in all of this is to just regularly invest. The regular investments are much more important compared to the market timing. The market timing can add some performance, but it's not going to fundamentally change things. Instead of buying $100 every single month, in some months we bought almost nothing, $1.53, and in others we bought $153. So that's the range for the dynamic dollar cost averaging. It does lead to more Bitcoin over time, but really what's much more important than timing the market properly is just to be regularly contributing. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time here on YouTube, or see you in Premium. In Premium, you get access to the backtesting tool. You also get access to the trades that I make. See you next time. Cheers.